Bob, thanks so much for joining in. Experts out here saying that it's probably more credible as opposed to being a ho-hum budget with lots of targets and probably not too much being achieved over the next 12 months. What's your sense from sitting out there?
I would agree with that statement, but I would just start off by saying let's recognize that the Indian government went into this budget in actually quite a difficult macroeconomic environment. Slowing growth in the fourth quarter of last year. The main feature of the Indian economy last year was obviously elevated inflation, plus what we would all agree was a substantial budget deficit in the last year, plus a current account deficit, plus obviously some structural setbacks to encouraging the opening of Indian markets to foreign real long-term investment. So the background in the last few months, frankly, has been difficult, and I think that's why the finance minister, frankly, did not have much room for maneuver. If one looks at the growth targets and the inflation projections for the next 18 months, I actually think the forecasts in the budget are realistic. I think it's realistic to forecast that we will see an improvement in growth to 7% plus over the next 12 months. I also think it's realistic to assume that inflation will moderate. Will the 5.1% budget deficit target be achieved for the next 12 months? I think there's a good chance that will happen. I actually think that the tax measures that were initiated, broadening indirect taxation, a small concession on income tax, I think those were sensible measures. One thing I do think on the tax side, which is important, however, is detailed measures on broadening the tax base and improving the efficiency of tax collection. And I think it's a fair statement that India has got some progress to make on that front. I think another issue is obviously a detailed longer-term plan for subsidy reduction. And yes, there was a statement that subsidies will be maximum 2% of GDP, but I think foreign investors would have welcomed a more detailed statement on subsidy reduction.
What has been done today, that amendment in the income tax laws, wherein it gives a retrospective effect, giving the pass to the taxman to chase all the Vodafone type of deals which were struck in the past as well. Does this sour the sentiment for certain foreigners sitting abroad saying that, hey, there are some changes that are coming about which may not sit well with us?
As a general principle, I do not like retrospective taxation. And if one's going to invest anywhere in the world, that investment is obviously part of the equation of that investment is based on paying a certain level of tax. And one assumes in making an investment that tax assumption is valid. If one discovers subsequently that one's tax liabilities are higher than originally expected, obviously that discourages me from investing in the future. So I think one has to make a very clear distinction between retrospective taxation, which I would argue is a negative in discouraging foreign investment, but on the other hand, if there is a clear case that tax liabilities existed and taxation should have been paid, that is actually different from retrospective taxation. So I would actually challenge whether the phrase retrospective is the correct phrase here. If tax is due, then obviously the Indian tax authorities should pursue that. If it is truly retrospective, then that's a negative.
All right, Bob, before we let you go, post the budget, now do you feel more confident about the India story? And, what would be your broad view on perhaps investment in the region? Or are you still a bit circumspect in terms of, the questions that are laid as far as implementation of fiscal plans are concerned?
Well, I think first of all one's got to make a comment about short-term technicals, and after the very good performance we've seen in emerging equity markets, and particularly the Indian equity market, and let's not forget that the Indian equity market has been, so far this year, one of the better performing equity markets. Therefore, short-term, I wouldn't be surprised if we see foreign investors take some profits. Short-term, we are somewhat overbought. By short-term, I mean the next 2 to 3 months. So, my view is probably a short-term period of consolidation. I would be surprised if we see significant downside in the market. Medium-term, the next year, and as we go into the second half of the year, I think we're going to have another equity market rally. I think India will fully participate in that equity market rally. I think the growth numbers will start to look better. I think the inflation numbers will look better. And although they're going to move slowly, I do think the RBI will ease further. That's a positive. And I think foreign capital inflows will probably pick up from June onwards. This budget, I think, certainly does not have a negative attitude or influence on foreign investment in India. And I think, if we see structural reforms being announced, particularly on real long-term investment in the Indian economy, I think that would be positive. I think the overall foreign investor reaction to this budget is going to be mildly positive. I don't see any negatives in it.